Okay, good day, everybody. Still here. It's Daily Market Pulse for Monday, December 9th, 2013. Markets were up. They did edge up higher. However, pretty much, even if they gapped up, but they didn't really go anywhere thereafter. They pretty much just kind of got stuck at former pivots, or recent highs. And kind of just stayed there. So with the volume and the kind of price action that we had, despite the fact that they were up, it's still kind of considered more of a stalling type day, meaning it can be considered a distribution because of the fact of just how it reacted, how it behaved. We would almost been better off having it go sideways or lower than higher today, especially with the way the candles appeared. So we're going to look at that here in a minute. But essentially, we've got everything still in a confirmed uptrend just because of where the market currently is, despite the fact that we now have added distribution days. Once again, we lost some last time. We've added more again. We're at 7 and 5. Everything remains the same with respect to the 8 moving average. The TSX actually was trading above it at one point, but closed right under it. So it has a little bit of an upper shadow. We'll take a look at that as well. So let's go there. Let's go look at the index. Okay, so we got the Dow Jones here. You see the big bounce that we had on Friday, following the unemployment numbers and so on. You can see that we had a shooting star, and then we had sideways action, including what appeared to be another shooting star here, but not quite. But still, it's 16,100. So and so on in that area is where the resistance essentially is after these kind of multiple doji, etc. Dropped. Pulled, pushed back up again, and not quite back to the highs, but struggling a little bit. It's a beautiful move. Bull sash formation on Friday, very, very bullish, extremely bullish, in fact. Not really the kind of continuation or follow through in confirmation you were looking for today, but it can still happen. But at least it's okay. But obviously, ultimately, the markets have got to get higher. They've got to get beyond the highs here. So let's call it 16,200 on the Dow to really kind of continue this trend higher. So that's it's got to get there. Otherwise, the support now, or at least the stop, would be essentially the low of Friday and Thursday for the time being. S&P, you can see, is right in that area. There was a dark cloud cover high, kind of played around with it, dropped, came back up. Now it's right back to that high again. This high here on this date of the 29th of November was 1813.55. Today's was 1811.52. So you can see it didn't quite make it there, but there's the struggle right now. Rising window today, which is an excellent sign. That's a sign of continuation, but still never could quite get to make a new high nor close above the recent highs. So right now your stop, if you will, your support area will be the window from today. The 8 moving average to some degree, which kind of coincides with the midway portion of that very large green candle that occurred on Friday on that bull sash. And then as deep as the lows of Thursday and Wednesday of last week, and even as low as maybe even the former polarity area at 1775. So you got things to look at on the way down if that's the case. But first and foremost will be today's window as a potential support. So let's look at the NASDAQ. Excuse me. NASDAQ did the same thing. So the high on this 29th, and pardon me, this was December 2nd, was 40.68.49, and today it was in fact a 40.81.78, but you see it closed below the high by pennies. So it's got up there. You have the hanging man here on Friday. We have a spinning top essentially today. So a little kind of bearish to neutral, kind of almost like potential profit taking at a minimum. It's a little iffy here. It's a little dicey in terms of what it's trying to reflect here and trying to tell us. So more likely to be more cautious than anything else. Peel some off if you haven't already done so. Take some profits now. Scale back. Be prepared for the possibility of some shorts. So keep an eye on that for sure. So right now it needs to clear this, get into the 40.75 area. Otherwise, it's fading back toward the 8 moving average, back toward 40.10 and maybe a little bit lower. So watch for that. All right, the TSX for our fine Canadian friends. So it's sideways for multiple days, as we saw here, for essentially a month, and then broke down, formed a hammer, and then was tested at lower. The low of the hammer was tested, including the 50-day moving average back on Thursday. Beautiful rebound on Friday, but did not clear the high of Thursday, unfortunately. But then today cleared essentially the former support, now formed resistance, but it got stuck pretty much right below the 8 moving average. So it's still, in my opinion, right at a resistance area, not really fully cleared because it needed to close a lot more dominantly. If it had closed near its high, I would have said, yeah, essentially we've got a crack and snap where now it's, it broke support, now came right back in, becomes an automatic buy, including the fact that it closed above an 8 moving average, but not in this case. It's still below a declining 8, so below a declining 20 as well. So needs some work here. So looks reasonable. Of course, the support will be the 50-day moving average. If you are long, that would be your stop essentially. For the time being, I think you've got to be, you need a better confirmation, I think, to get to the target above near 13.5. So watch for this one as well. So let's look at the U.S. dollar, Canadian dollar, because the U.S. dollar was showing some signs of life once again. So, but the Canadian dollar is obviously showing some signs here. So it broke resistance across the 106 area, tested that for a couple of days, went all the way up, formed a dark cloud cover on the 5th on Thursday, and then really kind of retested a new high on Friday before really fading and finishing near its low of the day and above the moving average. So this is, after a big strong move up, multiple green candles, as you can see, nice trend higher, is profit taking. It is also a period where it's going to pull back and maybe retest some level of a percentage retracement or the breakout area, which is all the way down here at 105.82. Approximately. So it could still come a little lower. Right now it finished near its low of the day. Did not make a new low, however, but it's still near the low of the day. It's not quite yet oversold either. So if I were to see just for fun here, there's the high, there's the low. So you see percentage retracement wise, it's got room to 618, which is right at 106. So I might still anticipate that it could do that. After that, it's hard to say. So we'll have to just watch for that. All right, treasuries will be next. And treasuries had a huge kind of spinning top that occurred on Friday. It was very volatile, higher, lower, finishing right where the previous session's close was very close. In fact, right where that goal line is, that goal line happened to be coincidental with a series of other lows and highs. It gapped higher this morning pretty aggressively, went into the 8 moving average and then retreated back to near its low. It's gapped up again in the after hour session, but you can see the highs are all coming down here. So the trend is still very much down. This is very much a channel all the way across here. So let's see if we can actually do this here. Let's go off we can go off the highs here like that, I suppose. And then the lows like that. So that's pretty close, I suppose, but it's not quite where I wanted it to be. It's probably more like that. Something like that. Yeah. So there's your channel right there. So it's got very little room. If it's going to go any higher, it needs to break out above the 20-day moving average, and then it has room at that point into 132, almost 133. Otherwise, you're looking for a fade back toward 130 and possibly lower on the treasuries for now. Gold would be next. Gold found support here, had a beautiful morning star formation back on the 4th, and then it came back and retested it and then bounced again today, but still needs to clear 1250 to 1255. Down here below here is at 1205, and essentially about 1210 is the low support. So it's kind of stuck, but it needs to get over the 20, it needs to get over the 1250 area, and then it's good to go. And silver is pretty much the same, but obviously in a lower denomination near 19 and 20. Let's take a look. So there's the morning star it had here as well, drop down and bouncing again. Holding down below here right at 19 and then trying to push it through 20 to 25 or so. Again, the 20-day moving average kind of important right there. Let's look at crude. Okay, so with crude, remember, had found the support down below here in this zone area based on a previous series of lows dating back a while ago, back in the spring and summer. Had a huge reversal, huge pop to the upside, came across the 95 area, and then it got all the way into 98. It had room still to 99, but didn't quite make it. Now it's going kind of rolling over a little bit. You see the spinning top, doji formations, bearish engulfing today. I'm kind of expecting this to come down at least a little bit, just based on what it's doing right now. It's certainly taken a pause. It's certainly taken a breather and a profit-taking appearance. I don't know how deep it's going to go, but I wouldn't be thinking overly short here. I would just be thinking maybe a slight pullback, taking a slight advantage, maybe with a small position, Maybe it comes into the 8 moving average or drops into like the 50% retracement or slightly higher, 96.5 maybe, before maybe resuming higher. Now I see it already gapped lower and is pushing higher, but it's still stuck below a declining 50. So we'll have to see how this goes here, but ultimately I think this comes higher. Now 99 will be the next target, and then of course 101 thereafter. So those are small caps. Small caps kind of sideways. We see the trend is still up, higher highs, higher lows. Held the change of polarity here at 111.50. Rising window yesterday, or pardon me, on Friday, rising window Friday, but really sideways today. Didn't do anything. Didn't make a new high, actually made a new low. Testing the 8 moving average, testing the window a little bit here. So for now, it's holding the window. If it drops down, you're looking at the 20-day moving average, or possibly as low as 109.5, almost 110. Otherwise, you're looking to break the highs of 114, 113.75 to 114 area. That's what it really needs to do to remain bullish. Transports are next with the IYT. And you can see the similarities here with the IYT. Same thing. The lows are still going up. The highs are still going up. There was a shooting star over here at the beginning of the month of December. Pulled back into the 20, pulled back into the polarity area, and shot higher. Made a new high today for the last 4 days, but still has room to the shooting star high at 131. Again, you still have, that's the target. Bollinger Bands are tightening, so it's not making room yet. But those need to open to allow the room to go. It needs to clear the 1272 extension. After that, you've got room to 136. If that's the case, that would be the next target to consider. And retail, RTH, there's the polarity area, up, down, testing, literally sideways. You see the goal line above, that's the highs, the lows are below, so it's literally in a box formation. Rising window, gapped higher, closed still above yesterday, or Friday's close, pardon me, but it remains with a window, meaning there's a little gap there. So it's holding that for now as a support area, but also was playing around with the former window, the falling window that occurred back here. So it got gapped into that. It will only negate that window once it closes through it. It didn't do that, so it gapped up into it and then faded, and then so it's got a falling window to deal with a rising window today to maybe hold it as support. So it's kind of stuck in a quandary, almost like an island, although not true. Room to the upside naturally, 61.37, looking to break out above that. Bollinger Bands need to split open. Otherwise, support at the window and support at the exact $60 mark, right? Semiconductors, SMH. Now this one was in a range and broke out. So you can see that the top was going sideways. The bottom was still rising. It had a series of lows here that were still rising in a bullish manner. So the pressure was certainly to the upside and definitely popped through on Friday. Friday gapped up, beautiful rising window, and then it went higher again today on a gap open today as well. So spinning top in a higher fashion. It may come back and retest 4150, but ultimately this is still very bullish with no true sell signals per se, except for maybe a little bit of neutrality, if you will, in the sense that once they gap it up, they immediately start to sell and take profits to some degree. It's still very bullish. No official sell signals is probably what I should have said and how I should have said it. The VIX was higher, 4 consecutive closes above a Bollinger Band before fading aggressively on Friday on the breakout of the markets and the indexes following the unemployment numbers. And then another fade lower again. So it did gap up a little bit on the open into the 8 moving average and faded, made a new low, made a new lower close. I was kind of expecting something lower, most likely, percentage-wise, but also the fact that there was with a falling window, that's a continuation pattern to the downside. And so you expect some form of continuation downward. I don't know how deep, however. It's not quite oversold yet. As we said with the markets, they're still at near resistance. This has room to support. So this could come down to 13, maybe lower, 1250, even 12, possibly with 1250 might be the range to look at. Okay, that concludes this session of the Daily Market Pulse for this Monday, December 9, 2013. We'll catch up tomorrow.